Most Americans unknowingly overpay thousands in taxes every single year, simply by overlooking basic deductions. Your personal spending habits, reflected in your financial mirror, directly determine this surprising loss or gain. Understanding your financial reflection reveals powerful opportunities to optimize wealth and reduce tax burdens. It is not about complex loopholes, but rather observing your everyday transactions with a critical, informed eye. Many people believe tax planning is an annual scramble, a stressful event rather than a continuous process. However, proactive financial mirroring throughout the year unlocks significant savings and strategic advantages. Ignoring these simple, ongoing adjustments means leaving substantial money on the table for the tax authorities. Imagine seeing your financial life as a clear pool. Every ripple you create has a visible, direct consequence. This perspective transforms daunting financial tasks into empowering decisions, guiding you toward greater fiscal control. It is about aligning your daily choices with your long-term financial goals, a true act of self-empowerment. By understanding these connections, you gain clarity on where your money truly goes and how to redirect it. This approach empowers you to build a resilient financial future, brick by deliberate brick, starting today. The first step in financial mirroring involves meticulously tracking every single dollar you spend and receive. This might seem tedious, but detailed expense categorization reveals patterns directly impacting your tax deductions. For instance, charitable contributions, medical expenses, and even certain home office costs are often overlooked. Many individuals miss valuable deductions because they simply do not maintain proper, organized records throughout the year. But that is not the strangest part. Often, people pay for services that are tax-deductible without ever realizing it. Consider your retirement contributions. Maximizing your 401(k) or IRA not only saves for the future, but reduces current taxable income. This is like having a secret money-saving superpower hidden in plain sight, waiting for you to activate it. Another critical aspect involves adjusting your W-4 withholding regularly, especially after major life events or salary changes. Incorrect withholding means either receiving a small refund, an interest-free loan to the government, or owing a large sum. You can use that to offset capital gains and a limited amount of ordinary income, avoiding year-end surprises. Wait until you hear what comes next. Strategic tax loss harvesting can turn investment losses into future tax savings. If you sell investments at a loss, you can use that to offset capital gains and a limited amount of ordinary income. This proactive move can significantly reduce your overall tax bill, transforming a negative event into a fiscal advantage. Furthermore, understanding the difference between tax credits and deductions is paramount for maximizing your savings potential. A tax credit, like the child tax credit, directly reduces your tax bill dollar for dollar, providing an immediate benefit. Deductions, conversely, reduce your taxable income, lowering the amount of money the government can tax in the first place. And then something unexpected happened. Many overlook state-specific deductions and credits, which vary dramatically by location. Researching your state's unique tax landscape can uncover additional savings opportunities often missed by general advice. Imagine your financial life as a garden. Knowing which plants thrive in your specific soil yields the best harvest. For those with self-employment income, estimated taxes are crucial. Underpayment penalties can quickly erode profits. Setting aside a portion of every payment for future taxes prevents a daunting bill and potential penalties. This careful planning mirrors a diligent business owner, always preparing for future obligations and responsibilities. Another often ignored area is understanding when to itemize deductions versus taking the standard deduction, depending on your situation. Tracking all potential itemized deductions throughout the year allows you to make the most advantageous choice at tax time. This involves keeping detailed records of mortgage interest, property taxes, and significant medical expenses, for example. But there is a crucial twist. Even small, consistent expenses can accumulate into substantial deductions over time. For example, mileage driven for business or medical appointments can add up significantly, but requires diligent logging. Even contributing to a health savings account offers a triple tax advantage: deductible contributions, tax-free growth, and tax-free withdrawals. This powerful savings vehicle provides a clear reflection of smart financial planning for healthcare costs and future growth. Finally, regularly reviewing your beneficiaries on retirement accounts and insurance policies prevents unintended financial complications. Embracing financial mirroring fundamentally changes your relationship with money and government obligations. It replaces anxiety about tax season with a sense of control and empowerment over your financial destiny. Imagine seeing your savings grow, knowing you have actively optimized every possible avenue to keep more of your money. This proactive approach cultivates financial discipline, transforming abstract goals into concrete, achievable results year after year. The real-world consequence is a more robust emergency fund, increased investment capital, and accelerated debt repayment. You gain peace of mind, understanding that your financial house is in order and strategically managed for the future. This knowledge empowers you to make informed decisions about large purchases, career changes, and retirement planning. It is like having a financial compass, always pointing you towards the most advantageous path for your wealth. The emotional payoff comes from realizing that smart financial choices are not just for experts but for everyone. By taking ownership of your financial reflection, you become your own most effective financial advocate and advisor. This continuous vigilance safeguards your assets and maximizes your potential for long-term financial security and growth. Ultimately, these practical tips contribute to a healthier financial ecosystem for you and your family for generations. It transforms the often dreaded task of taxes into an opportunity for significant personal and economic advancement. Your financial mirror shows you the path to prosperity, one informed decision at a time, reflecting your efforts. Embrace this journey and watch your financial landscape transform into a thriving garden of wealth and opportunity. By consistently reflecting on your financial habits and applying these practical tax tips, you unlock substantial, lasting wealth. Take control of your financial future and subscribe for more essential insights into building lasting prosperity. Like this video if you found these tips helpful, and share your own financial mirroring strategies in the comments below.